Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today in the second video on the weekend we will take a look not at the gold market but on the Canadian dollar. So I decided to take a look at the Canadian dollar because on the gold market actually, guys, nothing seriously has changed. So the major driving factor stands the same. In technical picture, well, maybe on the daily, on intraday charts, it has changed a bit, but on monthly, on the weekly basis, all major points of our analysis also mostly stands the same. So it's not necessary to make the immediate update on the gold market, and we could cover this problem within the regular daily videos that we're preparing on through the week. But on the Canadian dollar, situation changed rapidly because it has strong relation to the crude oil price, and you probably heard what's going on in Venezuela right now. So this political stuff it makes Canadian dollar very sensitive to this process through the relation to the crude oil prices. This is the first background. Second, compared to the Fed policy, the Bank of Canada doesn't take the possible rate hike out from the table, and from that standpoint, the position of the Bank of Canada stands mostly moderately hawkish, and this provides another support to the Canadian dollar. Combination of these driving factors create interesting setup on the monthly chart that correspondingly has relation to the lower time frames where we usually trade on. And in today's video, we will take a look at daily chart. First, I would like to remind you that last time when we have taken a look at the Canadian dollar was on January 4th. And at that moment, we mostly was trying to make some bets on this drop. So initially, we thought that this drop could give us the weekly bread and butter trade, but also some bullish grabbers have been formed here. But reaction after this collapse was very small, and mostly all patterns that we have suggested to get were vanished by the market, and we haven't got any setup here. Market just dropped lower. It just tells you how strong Canadian dollar right now, and if even reaction on the strong oversold, reaction on the strong support, few levels was really very small. And with the patterns that we have on the monthly chart, with the current situation, our major trading plan is to get upside pullback first, get the better entry point, get the safer entry point for taking position down, and second, as I said, take the part in the possible downward continuation. Because all this drop that you could see on the daily chart, this is actually the one candle on the monthly chart. This is bearish reversal candle that has tail close, and this is January month. As you understand, this combination of the huge black candle on the monthly chart with a significant political background, with the tail closing and with the reversal feature, has big chance on the continuation. Besides, as you understand, situation in Venezuela stands too far from the resolving. So that's our context for trading. Now, on the daily chart, guys, currently market has finalized a couple of targets. So you can see A, B, C, D, COP target has been hit. The downward action was finalized by the butterfly, 618 butterfly. Strictly speaking, market hasn't quite reached the 1618 extension of the butterfly, so market could fluctuate here a bit more, but mostly we stand at support area. Also, here market stands, or better to say, touches the upper border of the weekly confluence support. And all these combinations suggest that chance on the pullback still exists in the market, and probably we could get the retracement here. Maybe not right from this point, maybe a bit later, but that's an area that we should keep an eye on, possible bullish reversal patterns, since pullback could start. So for us, this retracement is not the object for trading, but mostly as the tool to get better entry point. But if you're a scalp trader, if you trade on intraday charts, on hourly chart, for example, why not? You could try to think in trying to search for some bullish reversal pattern, trying to make the bets on upward retracement. So that's the background for a possible pullback. The targets of the upward action could be different, but on the daily chart, it seems that the conference resistance seems as the most probable, because we are actually guys on the strong weekly support, and that's actually the first drop of the long-term rally on the Canadian dollar to the upside. That's why probably retracement has the chance to be a bit more extended, and as you can see, harmonic swing also point approximately to retracement right to this area. At the same time, on the 4-hour time frame chart, we have some additional details that let us suggest that retracement could be slightly smaller. So we'll take a look at the 4-hour time frame chart. What we have: downside action. On the downside action, market has completed 127 XOP target. So usually we use the 1618 extension. Jordan Napoli doesn't use 127 at all, but sometimes 127, especially when the market looks strong and it's driving by the strong extended external factors, planning of the XOP could be treated, 127 extension could be treated as just momentum impact when the market can't stop at OP, because OP has been hit here. That was just some minor continuation by the momentum trade. 1618 extension stands at 130 even. This is 50 pips lower, and it seems to be too extended for the current situation, because market is already at the support area. Speaking on the upside retracement, we have another confluence. So you can see it stands around 132 area. But this confluence has some advantages, because take a look that actually it includes the previous lows on the daily chart. These lows and non-lows, so they stand inside of this confluence area. And retesting of these lows, it seems more reasonable to suggest that this could become the target of the pullback. The most probable pattern that could trigger this retracement is the hand shoulders. Because take a look, this sideways consolidation and sharp drop down, it's actually the half of the hand shoulders pattern, so it could become the left arm and the head. This very, very often happens. Besides, if you will assume some action based on the hand shoulders, you will see that ABCD pattern based on this on the hand shoulders also point approximately to the same confluence, so it's minimal target of this pattern. So that's why we will see how retracement will develop, whether it will happen at all, of course, because we do not know what will happen on Venezuela in the nearest time, what statements will be made by the politicians. But if everything will realize as we suggested, in this case, this is the first level as we could use as a target of the pullback. So let's keep an eye on the Canadian dollar, because it's really very interesting currency right now, mostly due to the driving factors that it stands on the impact of which it stands. And overall setup, the patterns that we have here is also rather clear and could provide a lot of trading opportunities in the nearest term. So let's see how the situation will develop here.